I wonder what your thoughts are on the picture right now, because we do have a lot less uncertainty, really globally, after last week, but there are still issues, and if you look at Chinese indexes, they still are far off their all-time highs.
Yeah, well, Matt, I mean, I think the first point to make is that the picture is clearer than it's been, I think, it's fair to say, for quite some time. We've spent much of 2019 worrying about Brexit and the trade war, and you know, look, not saying that either of those things are solved completely, but at least in the near term, there does seem to be, you know, these things aren't going to get worse, and you know, more than likely, the next stages they're going to get a little bit better. So, you know, I think that the market reaction is understandable, and you know, here's the interesting point in relation to your comment on Chinese stocks is that it's very tempting to say that with both of these events that the market is very quickly adapted and priced in all the good news, but actually it probably hasn't. There's still a good bit of catch-up to be had for some assets in an environment of reduced uncertainty.
Some catch-up to be had for some assets. Good morning to you, Michael.
Morning.
Which assets then do you think need to play catch-up?
Well, look, I mean, I think there are a lot of cyclical assets that are both underowned and undervalued, and you know, so in the sector space, that's probably places like energy, Chinese, it's emerging market stocks in general, and then the currency space, it's interesting. Where you're just beginning to see money leak out of safe havens like the Japanese yen.
Where do you see havens releasing funds? I mean, if people don't need that kind of safety, are they going to be selling gold, selling treasuries? We've seen already quite a lot of that. Selling the Japanese yen?
Yeah, look, I think that is the look. So you know, when you thought about 2019, for much of this year, we've been worried about well, look, at the start of 2019, we worried about higher rates. That quickly went away. Then we worried about recession, and then we worried about the trade war, and we worried about Brexit. Doesn't mean that we're going to not worry about things in 2020. Markets always have a list of downside risks, and the downside risks are still there. You know, recession risk hasn't been killed completely, for instance. And I think one of the themes on 2020 is going to be a little bit about is this central bank accommodation that we've seen this year, will it deliver on the growth that we're hoping for in 2020? So look, not all of the safe haven trades will reverse, but I think yes, you've got to question why you'd have high cash holdings. You've got to question why you'd have high holdings of gold in this environment, and also safe havens like the yen. Yes.
I just want to mention one red headline across the Bloomberg. Electrolux dropping, 12% at one point, down around 10.5% now after its North American warning. This is the biggest drop in a year. It is a very volatile stock. Of course, we see it move often on its guidance. This is they're making a statement about North America, Michael. We won't dwell too much on the micro, but in terms of your recession watch and where the Fed heads next, we were talking to an FX guest earlier on from Commerzbank who was actually citing the possibility of the next move from the Fed being a hike in interest rates, as unlikely as that might have seemed some weeks ago. Some of the data has been strong enough to guide some in the market to suggest that. What are your thoughts?
I don't think it's that unlikely, actually. No, I mean, if you think about the language the Fed has used around its easing, is that these are insurances. And look, it will depend a little bit on how the global cycle develops next year and how the external environment is. But it may well be that the insurance actually wasn't needed, in which case you may take the insurance back. And look, I think the one thing that's, we see this a little bit in the online data that we look at, is that the inflationary process in the US is actually pretty firm, especially at the core level. And we've still got the lag of the tariffs to come through into inflation that we've not seen yet, but I think we're beginning to see it. So, look, I think that the US outlook is really important for 2020. I think the US actually probably won't do quite as well as it did this year, actually, and that might be one of the stories for next year.